Hi guys, it's Majesty Ibianga here with the Financial Drive-Thru again, and it's good to be back. In this video, I'm going to be talking about support and resistance lines, and I'm also going to be showing you how to draw them. And what you should know about these is that they are going to dramatically increase your success rates when trading cryptocurrencies. You're going to know when to buy and when to sell, how to identify a top, how to identify an entry point, and so much more. Okay, so if you're interested in that kind of content, you know what to do. Like, subscribe, stay tuned for more. Also share with a friend because one, that way you get to help your friends out and you also get to support the channel, and I'll really appreciate that. And that's it, let's drive through. Okay, so let's get right into it. What I have open here is tradingview.com, and this is typically where I do most of my analysis for different coins and stocks. Basically, it's a free platform. Anybody can use this. And why I like it is if you're the type of person who likes to do a little extra research, you can actually find other people's ideas on possible moves and everything, as opposed to just waiting on a WhatsApp group or a Telegram group for signals. You can actually have fully interactive conversations with real life people, see their projections, see everything, and make your own analysis. But today what we're going to do is I'm just going to show you exactly how I do my quick basic analysis. And at a first glance, it might look a bit intimidating, so I just want to tell you, don't worry about it. I'm going to make this as super easy and clean as possible. So basically, I'm just going to ask you to ignore all the lines that you see here. Let's just assume we're looking at a naked chart. And you can see there are just a bunch of green and red candlesticks, and if you don't know much about this, it probably doesn't make any sense. So before we get into this, I first of all want to talk about what each candlestick means and how you can interpret them, and let's take it from there. This is what a candlestick looks like. At this point in this picture, it's blue, but typically you're only going to see red and green candlesticks. Now, the green candlesticks signify that price is actually rising, and the red candlesticks show a dip in price, so when price is going down or a sell-off. The body of the wick is this big full fat portion over here, and the wick itself it's also known as exhaustion or a shadow. Okay, now what you need to know is the wick tells you a story and the body shows you exactly what price did. Okay, and I'll get into all that as we go along in the video, so don't worry about it. So the next thing we're going to talk about is resistance. Let's take a look at these two candlesticks in this picture here. You can see how both candlesticks, even though they have different sized bodies, both their wicks actually went all the way up and touched this line but did not cross it. So resistance is exactly as the name implies. It just resists passage of price action. Okay, so in this case here, you're seeing that the wicks were actually stopped by that line, and then price continues to struggle to break above that line. So here we have another image now with a support line. As you can see, the support is now like a floor for the wicks and the candles. Okay, so once again, you can see that while they're different size candles, as far as the body is concerned, the wicks were stopped by the line again at the bottom. So resistance and support are two very key things that you need to note. You can use them to actually make a lot of analysis done and kind of decide where price is actually going to go. Now, in real life situations, once price actually does break through either resistance or support, support will become resistance and resistance will become support. I'll show you an actual example of this right now. In this image, we can see price action on a British pound to US dollar chart. Okay, and remember I said this works for both stocks and cryptocurrencies, what have you. As far as we're tracking price action and there's a chart, you can do this. Okay, so price actually climbed all the way up and it hit a resistance level. You can see here this week actually did try to pass through the resistance area, but it's held very strong, and so price actually now dropped all the way back down. Now price dropped all the way to this other line that we have here, which is our support, and then you can see price bounced all the way up. Now again, it did the same thing with the resistance level and then bounced all the way down to support. And then finally, we had a strong candlestick that was able to break through what was previously resistance. And so it broke all the way through and then fell back down and held on what used to be resistance but has now become support. Okay, so what I have open here is the Bitcoin USD chart, and this is a daily chart. So where you see this D right here, you can see you can have minutes, you can have a minute, 3 minutes, 5 minutes, 15 minutes, 30 minutes, 45 minutes, 1 hour, and so on and so forth, right? I like to use the daily chart because the signals that I see on this are definitely stronger than any of the lower time frames. Let me explain that. So first of all, this is a daily chart. So what that means to you is that each of these candlesticks represents one day. So right now we're printing out a candlestick right here, and you can see there are 18 more hours and 29 minutes and 30 seconds before this candlestick will be complete. So that's typically a whole day. If I were to switch this to a 4-hour chart, you'll see that in the next 2 hours, 29 minutes and 18 seconds, that's kind of when this one will finish printing. So in this 4-hour chart, every single candlestick that you're seeing represents 4 hours. So you could say 4, 8, 12, 16, you know, the last 4 candlesticks over here happened over the last 16 hours. If we went back to the daily chart, again, this is 12th of May, and you can see down at the bottom you have the dates and timestamps. So 12th of May, the next candlestick is 11th of May, the next one is the 10th, and so on and so forth. Now, wicks telling a story. Let me explain what that means. It's always good to understand the direction a candlestick is moving in. So first of all, we know that green candlesticks are going upwards and red candlesticks are price going down. Okay? Now on a green candlestick, the opening price is the base of the body. Okay? The closing price is the top of the body. And that's because it's going upwards till it closes. Okay? Now the top of the wick shows you the very highest price of the day, and the lowest price of the day is the very bottom wick. Now the reverse is the case when we come to red candlesticks, which are selling off. Now let's go back to that chart. Let's take a look at this wick. When you see a really long wick going all the way down, it shows that there is a lot of attempts by traders to actually sell that coin. But what happens is, depending on where the body goes, you can see it's kind of like a tug of war. So think about it, people are buying and people are selling at the same time. The wick really shows you where it is, but then if the buyers kind of kept on buying, what happens is the body of the wick kind of still keeps going all the way up and then eventually closes. In this full candlestick, there's almost no wick, so there was actually not much of a fight. Everybody was really just buying, and that's kind of where it was. But in this case, you can see we have this really long, healthy wick. That just tells you that price was actually really trying to dip all this way. But then at the end of the day, and I say at the end of the day because this is still the daily chart, at the end of the day, the buyers were able to make up for all that and push the price all the way to this point. Okay, so now support and resistance. Typically, if you look at this chart, this is a blank chart, so you're thinking, okay, how do we make any sense of this? You want to always find areas where there was a lot of price action. So if we're looking at this chart, for example, we can start at the bottom over here. And some people draw their lines on the wicks. I prefer to go for the bodies, okay? So it doesn't have to be perfect. And the reason I say it doesn't have to be perfect is because honestly, everybody is looking at the same chart. Everyone's lines are going to be slightly different. So it doesn't really matter. Okay, so I had to log out of my profile just because I've already established a lot of lines, and I just want to show you guys how this whole thing works. And what I want you to do is, after seeing this, if you can just practice this, honestly, all you need is 10 to 15 minutes a day or a couple times a week, just so you can kind of get used to how this whole thing plays out. So in this case now, if you want to draw your resistance lines, you want to always check and see where did price bounce off. Okay, so we'll use this section. We see price came all the way up, it came all the way down. It went all the way up, it came all the way down. And then you can actually find like areas where there was just busy action, so like a lot of candlesticks in that same region. So like typically I would draw a line kind of around here. Now you can come to the they have all the resources and options over here for you. So on this one, we're going to take a horizontal line, and I'm going to put this here. So once I put that down, you kind of see why. So over here, you see price came all the way from down here, reached this area. We have this first candlestick, the wick went all the way, touched it. This one, the wick kind of passed through it, but the touched it. So you just really want to establish some touch points, okay? Next candlestick still kept that, and then it came down a little bit, but then if you look closer, you can still see that this little wick here still touched it. And then we had a candlestick that went through, came back down, went through, and before we had the upward move. And then when it came back down, we had a strong sell-off that actually broke through our previous resistance, which was now supposed to be support, and that just fell through. So it came all the way down again, touched down around here, and then made a strong move over here. Now, one thing you're going to find is that to cross a resistance line or a support line, you're always going to get a very strong candlestick. So you can see how strong and big this one was, kind of pushed through it here. And then we had a little sideways action, you know, just bouncing on and off. And at this point, we can typically say this resistance line, remember it was a resistance line here. And you can now see that after it came up, came down, fell through, it now became support in this area. And then from the support area, we bounced all the way up. And I apologize, I left out something. In trading, whenever you're trying to do technical analysis, you always want to look left. You want to go back and establish all these points so that you can actually, quote unquote, predict the future. Key thing about support and resistance, while it alone is not enough to actually give you, you know, a very, very high idea, it gives you a 50-50 decision. So it kind of raises your chances of saying, okay, price is going to hit this line and come back down. So in that case, I should prepare for a sell. Or price is going to hit this line and bounce all the way up. In that case, I should prepare for a buy. So all you're doing this whole thing for is just to establish a bias. Once you have a bias, you can make some trades and then you increase your success rate. Now, if you look at the top of this line, all right, if you look at the top of this upward move, and then you now look right, you can see that there's a lot of action, like price just kept on bouncing around this area for some reason. You could easily call that your next resistance line. Now you want to establish a few touch points again. So if we were to do another line this way, and I just used a shortcut key over there, Alt-H. And so yeah, I chose to draw that from the tip over here. If we were to move forward, you can see it has all these other wicks that were coming towards it. Now these first two over here didn't exactly touch that line, but the rest of them did. And so someone else might draw his to be slightly lower, it is still accurate. So rather than think about it and say, hey, my line has to be absolutely perfect, what you should understand is the whole thing is really more about an area. Everybody is actually chipping in and drawing their lines, and so what happens is we all come to the same conclusions at some point. If I were to make a trade and I were to say my trade will stop at 58,461, someone else's trade could stop at 58,000. We're still within the same range. So in that case, what you could also do if you're like really concerned about being perfect, you could come to this area here and pick a rectangle, right? And just do something like this. And then, we could easily say that that is your resistance zone. It's not a particular line, it's just an area. You're factoring in the fact that yes, a candlestick could have a wick that comes in somewhere within my zone, or could just touch the tip of the zone, and either way, it's still an accurate read. So if you wanted to play it safe and make a trade, you would make your trade to be just below the zone and say, okay, yes, once price rises, pull me out of the market at this point. That way you secure your gains, or you just have like a better success rate, because a lot of times you can get stopped out of the market and things could go really bad. Now remember, we're just looking at this section of the screen when we drew that line, but look at what happens when we shift it this way. You can see that that resistance line still has a lot of action going in, and even to this new section over here, we can see that the wicks and the candlesticks are coming and they're touching and respecting that line. So if I zoom all the way out, this is kind of what you're going to see in this section, okay? Price bounced all the way up from support, and then it came back to hit this resistance line. And what can you see here? Prices were actually coming back down. So the expectation is that because it's been happening like this in the past, it might just happen again. Now, this is not 100% foolproof because assuming something notable happens in the crypto space, for example, say Elon Musk were to come out and talk positively about buying Bitcoin, what would then happen is you would see a lot of action, and then this section down here is the volume. So you'd see that there would be a lot of volume coming into the market. You can see how this was major sell volume, then this green one here is major buy volume. You can expect something like that to happen. And typically whenever that happens, the candlesticks above it also tell you the story. So here where you see there was a lot of volume, a lot of people were selling off, and so typically price comes all the way down. When you see a lot of volume coming into the market in this area like this, typically price tends to go up. So right now there's not much happening in the market. You can see we just have very low volume levels, and so it's pretty safe to say that, you know, I expect because nothing is happening, Bitcoin's price might actually still hit this section and come all the way down, except something substantial were to happen in the market to actually make it pass through this area. So if you have that kind of knowledge in mind, what can you do with it, right? Picture this. At this point in time, I could simply take some profits, okay? So I've been in this trade, for example, since this section. Let's see. Let's say you've been in this trade since this area, right? And then you've made all these gains. You could actually even measure that, right? So if we were to start from here and we come all this way, that's a 98.97% rise in price. Okay, so I've been in this trade and it's come all the way up, and for some reason I didn't do anything. But then, you know, at this point, I'm like, because I've been seeing all the action in the past, and remember, you should always look left. Because you've been seeing all that action in the past, you can very easily take some profits at 58,000. And obviously when you've done that, say for example you switch to USDT, and then price goes all the way down, you can simply just at that point buy back into Bitcoin and climb again with it. And this is one very interesting way to actually increase your profits over time. So simple principle, everybody knows it: buy low, sell high. And so if you actually have an idea of where the high is, thanks to your resistance line, you can simply take your profits at that point and then wait for the market to fall back down so you can buy back in. Okay, so pretty simple process. Let's take a look at another coin. So in this case, let's look at Ethereum USD. Okay. So Ethereum's been having an absolute blast, 4,300. That is just amazing stuff. But I want to find, let's see if I can go to the weekly chart, for example. Okay, one thing I should point out is the higher the time frame that you're looking at, the stronger the signals, the stronger the candlesticks. So let me show you something here. This is actually a trick I use to actually get my lines done right, okay? I start out from the monthly. Now I can come over here and say price actually did play around this bottom area right here. And so I can safely establish this as a base. So this line here could be my support. Next up, I want to find, okay, what next? Which area did I notice price, you know, kind of touching? There's another line that can be drawn real close over here. Okay, so I have two lines now. And then I want to say, which other area do I have wicks that kind of touch or line up? Top of this first body over here lines up with the top of this wick on this side and the base of the body on this side. So I could pick that as my next step. So let's do this here, and I'll draw another line. Then I could come to the top of this second wick, the red wick over here, and I'll draw another line over there. Why? I'm just drawing this line because it lines up with this body and this wick. And then if I come to the next one, I could also draw a line at the very top of this wick, just because, you know, why not? I want to acknowledge that something happened with price at that wick. You can do the same thing on multiple levels. So I'm just going to draw another line over here, and that's because of this body and this body over here. And then if you want, you can also still choose to respect the wicks. And the reason I'm going to be doing both wicks and the body is so that while you watch this and when you try it out, you can decide which one works for you. Okay, so in this case, this last case, I'll just take price over there. Now that we've done this whole thing, we've drawn a bunch of lines and it's starting to look all messy and everything. So let's go to the weekly charts and then watch what happens with the lines that we drew. So on the weekly charts, if we were to zoom in, you could see very clearly now. It's kind of like a zoomed in view of what we just did. But you can see where, multiple candles now seem to be touching all those lines that we did. You can see over here, let's do the brush. And so we can see over here, I'll just change the color to red. So we can see over there, we can see over here, we can see over here, you can see over here. Like there's a lot of respect with the lines that we just drew. So I'm gonna clear all this out. And again, if you wanted to, you could take a look and refine those lines on the weekly chart. But then this is still the same chart. This is all the lines that we drew, you can see on the weekly. Now I'm going to drop this down again to the daily. And on the daily, if we were to zoom in just a little bit, oops, I'm still on the line chart, okay. So if we were now to zoom in, we drew all these lines on the monthly, but look at what happens here with price action. So we had a run up here, and then price kind of respected that line. We had a strong candlestick breakthrough, came up to the next line we drew, and then dropped down, came up, strong push through, fell all the way down. So a lot of action on this side. And then you see the lines again. So it's really just the same thing. You can see the tips touching. Now, we didn't do this whole thing from like the daily chart. We started from the monthly. I'm just trying to show you that you can get to the same results if you work your way downwards, okay? So first things first, things to note, you always look left to see what happened in the past, because that gives you a full indication and idea of where price is going next. And then after that, you work your way down the timeline to get all your lines. And remember, there was that last wick that, I marked off at the very top. That's it right there. You can see again, we had some resistance over here. Price kind of played around and respected the lines and all that. Now, what's interesting is you can draw all these lines long before you see this blank space, long before any candlesticks are printed. So if I were to leave this chart exactly as it is, you'll see that price would actually come play around. We would expect that we would see some movement in this general direction. So you would expect, this kind of movement, and then maybe it breaks all the way out and then you can go to a higher high. But this is kind of what we're looking at. What you want to do is you always want to buy or sell at resistance and support zones, because that's actually when the change and where the movement is starting from. So that's the quote unquote top or bottom at any given time. So if, for example, I had looked at this chart at this point over here, this would have been my entry at this point if I could catch it. And then obviously you're going to ride, and you just have to at that point determine how high you want this thing to go. Are you willing to risk seeing it bounce off this line and fail, or in this case, depending on the volume? And as you can see, compared to the previous chart we looked at, there's a lot more volume on this corner, okay? And so that's kind of why Ethereum's been pumping the way it's been pumping. Pick any other coin you want. Let's look at ADA USD. And right away, just looking at this chart, I'm sure you can already see where a typical line would be, so I'm not going to waste time. You get real fast at this at some point. I like to use both a blend of both the wicks and the bodies just to determine my lines, because it's good to have a little range in that. And so I can already say this is something that I'm seeing at this point. Wherever there's a lot of action at the base, that becomes your support. And you can see we've had multiple touch points. So we had a touch point here, touch point here, touch point all here, again and again. In this video, what we've done is we've talked about Japanese candlesticks and how to interpret them, what they actually mean. We've actually also looked at support and resistance zones, and we've talked about how you can use all of these to establish a bias for either a buy on a cryptocurrency or a sell on a cryptocurrency. And just know you're not limited to just horizontal lines. You can actually identify support and resistance on an active trend line. So in this case, you'd be seeing a trend line where the touch points are over there, and then you can do the same thing for the resistance as well. Just follow the trend. The trend is your friend, and you always want to look only for entries that are in the direction of the trend. Okay, so any point at the base or the support level is typically a good place where you expect a bounce upward, in which case that's kind of where you want to buy. That should be your ideal entry point at any given time. So the aim of this video is I'm trying to get people away from chasing signal groups, because for starters, what you're doing by chasing signal groups is you're putting all your money in the hands of someone who you don't really directly know. Sure, they might get a couple of trades right, but then if they get the wrong trade, that's really just a gamble. At that point, trading and cryptocurrencies and forex and everything that you're doing is simply gambling. But if you can learn all these little tricks and start to establish a bias for yourself and say, okay, this is why I'm buying this coin, or this is why I'm putting my money here, because I've seen that it's had this touch point and this touch point, you know, and I know that this is what price is going to do and the trend is following up, then you're really good. You know, at that point you can say, either way, when you make that money, one, it's more fulfilling because you earned it, like you really actually earned it. And then besides that, you also gain some more confidence in the market and all that. So I want everyone to just, you know, take some time every day. You can practice this on your own. Simply go to tradingview.com. It is free, and just click on the charts, type in the symbol for the coin that you want, and just practice this whole thing. Now, the fun part about it is once you sign up and you draw your lines are going to stay there. And the interesting thing you're going to see is this. Even as time progresses, you're also going to see that the candlesticks that appear in future are actually still going to be respecting that line that you drew. You know, yes, you were looking at the past, but it just makes so much more sense when you've drawn the line ahead of time and you get to see what happens in the future. Even if you were receiving signals for someone, before you put in that trade, I want you to go to TradingView or MetaTrader for wherever it is that you do your chart analysis, and take a look at the chart, draw some lines, and see if you agree with what the person has told you. It'll take you a few minutes once you get really conversant with this whole process, but I definitely want to know how you guys found this one, so let me know. Also, I need to take this time to say a very big thank you to all my subscribers. We finally made it to 1,000 subscribers. I want to say a big thank you. I love you guys. I love that you actually watch what I'm putting out here, and my commitment to you is that I'm just going to keep on bringing out quality content, and I hope that this actually helps you guys. So if you like this video, if it made any sense to you, be sure to give it a like, share it with your friends or anyone who's trying to learn this. I'm trying to do some more beginner-centric content, and so if this was still a bit technical, just let me know in the comments and I'll work on that. If you found this useful or you tried it out and it's working, also let me know, because I like that feedback. And yeah, that said, I'll see you on the next drive-through, guys. Peace out.